And start the recording.
Okay, I've
Okay.
started the recording.
So call to order and just quick approval of the agenda, which is, basically a focused agenda for the review of the financial statements and the ability for board members or trustees to ask questions. I will comment that there is no section here for landowners to ask questions, as that opportunity will be afforded at the AGM. So any other last minute agenda items that anybody wants to suggest?
Mr. Chairman, I have one late item, and it's simply to recommend and request time for an in-camera meeting next week, if at all possible. Two items. I'd like to present some advice from the municipal solicitor in regards to a matter that we're dealing with. Second item is just to give a verbal briefing to the board on some of the human resources HR matters related to conversion, as the CVRD will be starting the process next week of making offer letters of employment. That process is going to start next week, and I'd just like to brief the board on what's going to be happening.
So with a modified agenda with that second item, any other thoughts? I guess first off, is everybody in agreement with adding that agenda
Yes.
item?
Sure. Yeah.
Okay. I am also in agreement, so that gives us 3. All right, any other items? Okay, so motion to approve the agenda as modified.
So moved.
Second,
Okay.
all in favor say aye.
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 Aye. Okay, so new business, the presentation by the auditor of the 2020 financial statements, Graham Roberts of MNP Accounting will do so. They are attached to the agenda. And Gary, because we have people on the, Graham, because we have people on the phone, please just continue to say what page you're on so people can follow along.
Sure, yeah, I'll do that, but it's okay if I have share my screen?
Yes, which means you probably need permission,
Yes.
which means Gary has to make you host.
Share screen. Okay, so I click share screen.
No, what you want to do is make Graham host.
Oh God, how do I do that?
Go to participants.
Okay, participants. Yeah.
I think you click on Graham or right click on Graham and it'll say make host.
Right click. Make host. Yes. Just click on that.
Yeah.
Do you want to change the host to Graham Roberts? Yes.
And then Graham will change it back when he's done.
Oh, okay. Learn something every day.
Is it still recording? Because when we did that once, we lost somehow the record.
Looks like it's still recording because it just says
Perfect.
recording.
Perfect.
Okay, yeah, I just think it's easier for me for those that are online to see what I'm looking at. And we got the colored version of these documents too, so we can show those off. So for those on the phone, it's page 20 of the package, the agenda. So it's
Okay.
just the title page, but yeah, I'm just going through it. So on the second page of that, so page 21, engagement status. So we completed our audit. Everything right now is still in draft form. They're in draft form until we get back signed representation from management, and also review of any additional subsequent events, and also board approval of the financial statement. So everything is draft until that's actually all those have happened. So assuming that all happens today, our audit report would be dated today's date, April 22nd. Final materiality that we used is 50,000, so up slightly from the prior year, and that's just because we use revenue as our measure of determining what materiality is. We weren't engaged to look for fraud or anything, but we did not come across any instances that would cause us to believe there's any. Nothing has come to our attention in regards to non-compliance with any laws. Going concern, so it's a accounting term. So if you're able to keep operating a normal way, you are operating as a going concern. But as we know that the improvement district is ceasing to exist on January 1st, 2021, we still think that's a reasonable assumption to prepare these financial statements in. Just want to make people aware of that. So yeah, I'm on page 22 right now.
Thank you.
And so these things have been recorded, appropriate accounting standards have been used, the accounting standards used is public sector accounting standards. So everything is fine there. And then the bottom point, we've added this financial management water treatment plant. So the water treatment plant was completed during the year, cost of just under $5.4 million. This had dedicated funding of $700,000 from reserves, just under $49,000 from the Kensington Group for the water treatment upgrades for future expansion, and borrowings of $3.5 million. So there's a funding deficiency of 1.1, which is the difference between the cost and what the dedicated funding is, which contributes to the accumulated deficit position of the district at year end. When we go through the financial statements, you'll see that there still is an operating deficit. So we know that you're looking at different ways of reducing that funding deficit. The options are allocating additional reserves, additional borrowing, or additional levies. Okay, so the next page. So to issue our audit independence report, we have to confirm that we are independent, and we are independent of the board. We have a little independence letter attached to the last page of this. So when we did the year end, there's some summary of differences which are shown here on the next page. So on page 24.
Excuse me, can I break in? Gary, can you let me in? It says, please wait, the meeting host will let you in soon.
Oh, that
Oh,
might be
that's going to have to
Graham.
be me. Sorry.
Oh, sorry. Thank you.
So what you see on this page,
Eve, if you could hang up your phone.
I did.
There, beautiful, thank
Sorry.
you.
so this table just has a summary of the different adjustments that we made. These are just typical year-end sort of accruals and year-end adjustments that we've historically made for the improvement district. So nothing out of the ordinary there. You can see the Kensington project. So that was in deferred revenues. So they paid for that money up front, and it was brought into revenue in the current year as the water treatment plant was completed.
Gary, Graham, one quick question about that. They actually paid us more than that.
Correct.
And so that would have been they actually paid the amount that would have been required as a letter of credit, right?
Yeah, they paid 125% of the estimate.
Right.
And so that was paid, I believe, at some point in 2019. And so the project's completed. So the residual, the difference is sitting in the accounts payable right now. So we brought this amount into revenue because those are the deemed costs.
So in other words, the recommended treatment would be to return that money to Kensington?
Correct.
That would be the 25% contingency, right, Graham?
Correct.
Because I have confirmed with our engineering consultant that the costs that were estimated at the time are not materially different than the actual costs that were expended for that upsizing. So basically what that means to me is we're really in a position to have to return the 25% contingency.
Okay.
So the next page, page 26, so those, nope, still page 25. Yeah, 25. So these are just some adjustments that we didn't make. We just didn't bother adjusting the long term. The other one was just a timing thing, and just other amounts, some other miscellaneous amounts. So we can say that these are items we found, we didn't adjust, so, and they're not materially stated because we stated what our materiality is, was the 50,000 up front. So that is the audit finding. So now I'm going to jump into the actual statements. And I'm going to go find where I am in different pages. So I'll start with the audit report.
What page number are we at then?
Yeah,
It's,
I'm just finding that myself. So it's page 5. This is our independent auditor's report. So, our opinion is basically the second paragraph there. In our opinion, the company consolidated financial statements present fairly in all material respects. The consolidated financial position of the district as of December 31st, 2020, and the results of consolidated results of operations and cash flow in accordance with Canadian public sector accounting standards. So it's a clean audit report. We don't have anything to report other than that. So I'll jump into the statements now. I'm going to start with the income statement, or the statement of operations, which is page 8. So I just want to highlight a few things here. So water tools, you can see were less than budgeted, but we came to that conclusion or that expectation when we're preparing the budget for 2021. So they came into what we were actually estimating in October, November timeframe. So then the other income brings in that $93,000 or almost $94,000 for the upcharges on the water treatment plant. That's different there. Parcel tax, again, there's a big increase in parcel tax rates from the previous year. And there's no other real changes in revenue. Expenses, big increase in amortization. When the water treatment plant comes online, we start taking amortization on that. And that's being amortized over 25 years. And that's the main driver for the increase of amortization. So again, the other new thing here is interest on long-term debt. The interest that was paid January to April was capitalized part of the water treatment plant. So what you're seeing there is interest costs on the loan from May to December 31st. The budget amount, I think, was assumed it was going to be converted sooner. And I think it also may include the principal portion of it. Which there was no principal portion in the current year because that loan wasn't converted until 2021. Repairs and maintenance, they're up as well. Part of that we'll see when we look at reserves was funded out of one of the reserves funds. So that over expense was authorized by the board. Utilities up, water treatment plant uses more electricity than previous. Vehicles down, just less travel requirements, and wages benefits are up quite significantly. Some additional staff are brought on in regards to the water treatment plant, change in the way firefighters were paid as well, and also some severance pay and also retro pay on the union contract employees. So in the year, there's a consolidated deficit of 47,634. So that's consolidated with all the different funds and all that. So I'm going to jump to the end now to show you where that is, how that is made up. And I'll just tell you what page it is on those on the phone quickly here. It is page 18. So this is the different funds that made up the income statement. So you can see the beginning of the year, the operating fund. Just change this a little bit here so it all comes in a little better. You can see the titles. The operating fund, it does have a strong surplus in the current year. That was
Sorry, I don't know. When you say page whatever, the page we were just on is page 2 in my package. So what page is that actually on? I don't have a page. Whatever. Page what?
looks like the wrong one. Let's see here.
Is it page, I have page 12 maybe?
Yeah,
Yeah, I think
well, it's page 12 on underneath it, but in the
Oh,
Yeah,
PDF.
Page 12, Eve.
Yeah,
Thank you. Okay, carry on. Sorry.
yeah. You can see like the operating fund should always have a healthy surplus because we do a lot of transfers down below because we're bringing in all the parcel tax into revenue in the operating fund, but then we're allocating it out to the reserve funds down below. So you should have a surplus in the operating fund, and the budget also had more interest being charged and stuff like that. So you should have a good surplus in your operating fund. The big thing is you want to see their ending equity balances between the different funds.
Sorry, could you repeat that last little bit, Graham? I
want to go through the ending equity balances. So this is the accumulated surplus or deficit of the different funds. So you can see the operating fund started the year with $522,000 in a deficit. So then you go through, that's the opening balances. Then we have this acquisition of tangible capital assets. Because for public sector accounting, when you purchase an asset, you create equity in capital assets. So within the water treatment plant, it shows as a negative. And the reason for that is a timing difference. The amount of additional capital that was spent in the current year was actually less than the amount of borrowings that were done in the year. So that's the cash flow. So typically you'd see the operating fund funding the capital fund for additions, but just because of the timing difference of when the loan draws were taken and when actual cash payments were making, it's in the opposite direction than what you typically see. So it's a bit confusing, but so I just want to make sure you're aware of that. So that's why there's a positive because it really should be normally funded from operating typically. So it's kind of almost like.
So can I state that differently? The 403,000 deficit under water capital fund is the net between the amount we funded it from operations this year and the 700,000 we withdrew for the plant.
Yeah, basically, yeah.
Okay, thank you.
So then I talked about some of the expenditures were over. So we had some acquisition, or sorry, I think it shows it on the next page better. Yeah, it does show. We'll go to the next page now. So those expenditures funded through reserves that they're actually sitting as operating expenses or operating costs. This was for some firefighting turnout gear, new hoses and all that. So that was funded out of the fire restricted renewal fund. Just want to make you aware of that. So then the operating fund's in a better position, but still within a deficit position. Your equity and capital assets for both the water is equity that you have in those things. It's not actual cash accounts that you have access to. And the other ones should be cash accounts that you do actually have access to or commitments to fund.
So how much cash do we have in our Public Works Capital Reserve?
Well, it's kind of all blended together as a big portfolio, so that's a good segue to go actually into look at the statement of financial position.
What page?
So the page number is 1.
Oh,
On the paper
it-
copy.
on the paper copy, and let me. And the agenda package is page 7.
okay, got it. Yeah, thank you.
So the investments are just GICs and term deposits. So I look at those two numbers really as being the same. So last year is 2.6 million. This year it's, 2.7. So it's gone up $125,000. But then if you look at your reserve balance, they've also gone up. So I'll show you something towards the end, but I just want to go through the rest of the financials here. So your accounts receivable, part of the driver of the reduction there is GST rebate is down because you're not doing the capital project anymore. Good news. And also the receivables for water tolls and parcel tax have gone down the current year. So that's good news. Collections are getting stronger in that front. Accounts payable, again, it's down due to construction is being completed. So there's no big construction payables included in there. A bit of a timing difference in some payroll remittances. That's why that balance has increased. I'm not going to go there, but for those who have the paper copy, it's the note 5 in the financial statements. Deferred revenue. So the main reason that's down because we brought in that $43,000 into revenue on the completion of the water treatment plant. And construction loan. So at year end, it was still just a construction loan. It hadn't been converted into a regular loan until after year end. So that was the ending balance of the loan at December 31st. So you went from a net asset position to a net debt position. So that's your financial assets less your financial liabilities. And the reason for that is the loans that were taken out to fund the water treatment plant. Okay, so yeah, capital assets are all obviously up significantly because of the water treatment plant as well. So that's all I have to say on the balance sheet. Talked about the revenue already. So this is your change in net financial assets, debt, and sort of just walks through how we calculate that number. And our cash flow statement as well. So you can see there's a it's a timing thing. You can see the cash provided by operations is actually a negative, and that's just because of the payables. We had the large payable balance last year that we actually paid this year. So again, that's just a timing issue because there's a draw on that, but we funded that through construction draws there.
Page number 4, right, Graham?
Yep, page 4, yep. Or those people online, it's page 10 of the agenda package.
Thank you.
Okay, and the notes to the financial statements. We talked about most of them already, or at least talked about accounts receivable, accounts payable. There's a breakdown of what makes up the water treatment plant there, or what makes up tangible capital assets, note 6, which is on page 7 or 13, depends on how you count. There's some more detailed information in the schedules at the back, but you can see we previously we just had the water treatment plant included in work in progress in the water systems. We thought we should just break it out as its own separate asset now that it's a completed project. So you can see this, the amortization recorded on it during the year is $143,000. That's why amortization is up so much. And here it breaks down what in our accumulated surplus, which was shown on that schedule already. It sort of breaks it out into the different classes of surpluses here. And we continue with the significant event note. Due to COVID, as we're doing this meeting on Zoom, it's still very significant for operations of it. And we also note the conversion of UMB Improvement District into a service area of the Comox Valley Regional District.
What page are we on now, please?
Oh, that page was page 9,
Okay, thank you.
note 13.
Right, got it. Okay.
So we talked about the funding piece previously. So I just sort of was updating this here. So these are the different reserve balances that we have. And here's our working capital. So there is a small shortfall there still. So basically that 1.1 that was mentioned in the audit findings piece is almost been fully funded, still a little bit short though. So
How did that happen? This is where I'm getting lost what's our deficit? You know, we funded the plant as if it was $4.2 million, but we paid $5.3 million for it. So that's the $1.1 million deficit. So if that doesn't exist in terms of a shortfall, how did that happen? Did that make sense?
no, I'm not sure what you're asking yet.
Okay, so we funded the plant as if we paid 4.2 million for it. We took 700,000 out of reserves and we took 3.5 million dollars of debt.
Yeah. Yeah.
Yet it cost us 5.3 million dollars. So I understand, yes, we have a 1.1 million dollar funding deficit. Yet you're saying we don't have a reserves deficit. So I'm just trying to understand the difference.
Well, I think I haven't looked at it, but there might have been operating surpluses that prior to the start of the water treatment plant that have been exhausted and have gone away, right? So was 1.1 ever fully supposed to be funded from the overall operations of the district? I don't know. But that's what the funding deficit is, and by it not being funded, it gets funded out of operations, which is the reason why we do have a deficit in the operating fund. Like if you didn't fund that 1.1 of operating, you'd have a significant operating surplus, accumulated surplus.
Were we allowed to use our operating fund to pay for the engineering and the equipment and the other contracts that didn't get funded? I thought that would have to come from the Public Works Reserve, the Capital Reserve Fund.
To access those reserve funds, those need to be passed by the board as a motion.
Right. Well, that's what they did to fund the 4.2, right?
That was the 700,000 that was passed.
Yeah.
So then by default, the rest gets funded out of operations.
We have that much money. We had that much money in operations, 1.1 million bucks to play around with.
I don't have that number in front of me, sorry.
Well, we kind of do, don't we? What was it in 2019?
2019, oh,
Operating fund. It says we were in the negative $500,000.
yeah, so that's last year's ending balance, right?
Okay. How can you be in the negative? What could we have, where did we come up with the money if we were in the negative? I'm sorry, I don't know anything about accounting. So
Yeah, you're in, so these are different funds. But they're not in isolation of one another. So basically, last year, the operating fund was sort of, lack of better terms, borrowing from some of the reserve funds. So it's an internal fund allocation within the organization.
So Graham, it's not a question so much as maybe I can assist a little bit. I think maybe the trustees have in mind what I initially had in mind when we talked about this when you overviewed the statements with Janice and myself. When we had that meeting in regards to the new office, the office, the washroom, the portable modular building, you'd prepared for me a simple one-page little snapshot, which sort of totaled up and maybe the numbers are a little different because you did this, I think, before finalizations of the statements, but you totaled up the reserve balances when we talk about water renewal, fire, operational, non-stat reserves, and that came to about $2.4 million. And then you totaled up the working capital, and this is the piece that makes most sense to me that I can understand. You totaled up the working capital, and we're talking about cash balance, investments, accounts receivable. Then, you take off accounts payable and deferred revenue, and that came to like 1.86 million. So you do the math, you subtract the working capital from the reserve balances, and we've got a shortfall of reserves of about $542 million, sorry, 542,000.
I have it on the screen now.
Yeah. So can you kind of reconcile that picture with the financial statements?
So here's the numbers here now. These have been updated to reflect what's in these financial statements for 2020. So there's still a little bit of a deficit there. The reason for that, primarily the reason for that is the amount paid in the current year, or the expenses incurred in the current year, were less than the actual amount of borrowing, in the tune of about 500,000. Oh, it shows on that, it's basically that 450 or whatever, that 444. That's the difference between the amount that was spent and borrowed in the current year. So that's why the numbers have changed.
So this is really confusing. I have to admit that I'm kind of going, I'm lost. Do we have a problem or not? And if we do have a problem, how big it is. And then if I take the concern one more level, we need to explain this to our landowners very clearly next week. And, this isn't clear at all to me.
So as of December 31st, because these 2020, these numbers are here. If you're to liquidate everything, you wouldn't have you wouldn't have $55,000 to pay those reserve balances that are outstanding.
Pay those reserve balances that are outstanding. That doesn't make any sense to me whatsoever.
So these are amounts that
$548,000 in the water renewal fund or not? Do we have that money in there? I'm sorry, I'm really not.
Your total working capital is less than what you should have in your reserve balance.
Eve, let me try it, because this was where I think I got lost before, right? I made assumptions that when it says reserve balances, that there is money in that account set aside.
That's what I'm.
Yeah.
It's not the case?
No, it's in things called cash and investments.
Yeah.
Right. So it's never been like, if it said investments, water renewal, and we split it off that way, it might be, a little bit easier to see it. Right. But I had always assumed that when it said, we have a water renewal fund, that there was the money was set aside. It was differentiated from investments. But that was an assumption I made, and it's not true.
So that money is in investments.
Or in cash. Yeah, it's somewhere in there.
Yeah, so the cash balance is 2.7 approximately, right? But then you also have your payables, and that's why I've done it on a working capital basis as opposed to just cash, because that some of that cash is spoken for your other charges against it.
See, it took me a while to kind of get it. I think, Graham, I mean, I'm not an accountant, but this is the slide that makes most sense to me, that I think is most easily explainable to the ratepayers in terms of the current situation we're at. You know, the total amount of the reserve balances, and there's not little pockets of money sitting in each of those. And then you compare that to our working capital, and we don't have enough working capital to support those reserve balances, right? That total reserve balance.
Yeah, and then there's also no sort of operating surplus for any contingencies.
Right, right. So I think,
I can't see that slide, so I'm hoping that will be
I'm
part
I'm
of the
still-
package.
Still confused.
it was in your package at the meeting when I talked about the portable office modular building.
Okay,
Yeah.
okay, I'll go back and look
Yeah.
later.
Yeah, and this,
Thank you.
I've updated the numbers slightly due to the, to reflect the numbers that are in the statements today, but same sort of number, I think. This is my original one. Yeah, I just didn't have any of the numbers there, but yeah.
So again, another kind of dumb question. Sorry, but I don't understand this. So if we have to pay for that office and washroom, is there investment, or do we have money in investment that we can use for that?
I
Or
think the
no?
answer to that, Eve, is yes,
We're still
but
short. Well,
it
I
just-
mean, yeah, is there
it'll
money?
create a bigger shortfall.
Yeah, correct.
So if we had $125,000 to pay for that office complex or office building, modular,
Mhm.
we would now be in the hole, $180,000.
In the hole.
Shortfall of reserves, right, would be $180,000.
Yeah.
Well, then the way this is written, the reserve balances. What about that 1.5 million for the fire? Where is that?
It's,
So maybe I'll just change the wording here. It's not called reserve obligations.
that's a
Reserve
better word.
Obligations. Now that makes a whole lot more sense to me than balance means a balance. It's in
love-
there.
That clarified it a ton, Graham.
And Eve, none of them are stupid questions, because I was struggling with this as well.
Thank you. I've avoided accounting all my life.
So Graham, question then, when I look at 2019 and I go shortfall of reserves was 10 times bigger last year, why wasn't it a problem then?
The project was still going on. It is a cash flow item. Depending, like, more reserves could still be allocated to the project because the project was still ongoing. More borrowing could be done. Like there was just the way construction projects work. The borrowing is always delayed the actual project because you get your invoices a month after the fact or whatever. So there's always a timing difference. So I talked about it, but at the AGM last year, I think I did mention something about it, just saying that it was mainly a timing difference because I did not know where these numbers would end up at the final completion of the project.
So when you say in your notes or that we have a surplus issue that needs to be funded by borrowings, levies, or allocating additional reserves.
Yep.
You're speaking of $55,000 worth. Is that true, or are you speaking of $1.1 million worth?
Well, there is 1.1 is a funding deficit, I guess. I guess the question is how much of that should be coming out of operations? Because you could fund it out of operations. And I would say that because I think you'd still, to operate efficiently and effectively, you always want to have, some sort of contingent reserve of, 10% of your budget or whatever that number would be. Because we still have a deficit which is close to this number. It's not surprising that this number is close to your operating deficit, which was $32,000. So you still have that deficit in there, right? So which limits, potential flexibility or if costs come about that you don't have the ability to pay for. Hence, like the new office and washrooms for the water treatment plant, right? If you had a whole bunch of surplus from accumulated surplus, you could pass a board motion to fund it or go from there.
But
So
Graham,
you-
the issue that really we need to kind of focus on and address is this shortfall of the reserve obligations, right? This $542,000.
That was last year. Now it's only that difference is only $55,000, which is a hell of a lot better than it was last year.
And a hell of a lot better than the first cut at this.
Yeah.
Yeah.
Right.
I'm
Okay.
breathing easier, that's good, but can panic less than I was panicking before.
Uh-huh.
So Gary,
Yeah.
as we go through this exercise with our consultant who's preparing a report and recommendations as to how to proceed, will that report include a recommendation as to what level of contingency or reserve surplus that we should target? In other words, we're at a shortfall of 55. Will he recommend that you should be at a surplus of X?
Yeah, I haven't spoken to him since sort of putting him on this and asking him to contact the members of the committee and the board. Yeah, that would be, issue number one is to try to explain this as clear as possible. What is the current situation at the moment with respect to this? What are the options to address this shortfall? Whether or not he'd make recommendations, I'll talk to him about that. He'll certainly present the options and perhaps what is more feasible, obviously. And Graham's alluded to some of the options here. So if that's what you're asking, will he provide recommendations? I'll need to talk to him after he, sorts this out and gets a clear picture in terms of where we're at. But that's part of the exercise. This is a complex kind of financial exercise to try to explain this and try to, chart a path forward with some viable options and recommendations.
So I'm struggling, with sort of trying to figure out whether we're dealing with a funding issue, like an asset funding issue, or we're dealing with a potential liquidity issue. Graham, how would you characterize it?
I wouldn't say it's a liquidity thing because you still, how would I characterize it? So your reserves are underfunded and you have I'll throw this number down here right now. I'll put it as a negative because it's a deficit.
What's that number that you wrote down there, the 35?
That's the deficit. The
From
operating
where?
deficit for the current year.
Okay,
So if you add those two, it's a 90,000 issue. But
okay.
then you I don't know, you always operate with something, I don't know, contingency, and I guess, well, I guess you do have 106 in one of those reserves you do have 129 sort of non-statutory reserves as some surplus funds available for that rainy day or for those what ifs.
It's raining
Yes.
big time. Right now.
Yes.
Here.
But that's the issue, right, Graham? When you cut it all down, is we should not be having a shortfall of reserves. And we really shouldn't be in that position, and we've got to take steps to address that.
Yeah.
Is that
So
correct, Graham?
So we have a operating deficit combined with, increasing reserve shortfall by 35,000. So we're at $90,000 shortfall, plus we've got $125,000 spend coming for an office building.
Yep.
So we're 215,000 short, and then we need some contingency, or we should have a comfortable level of operational reserves or operational surplus in the event of revenue shortfalls or cost expense overruns. And so the unanswered question is what is that contingency number? I'm not sure we can answer that right here, but it would be nice to have a recommendation as to what a best practice or a standard practice is in terms of an operation like ours, as to what sort of level of surplus we should be running with.
I haven't really spent any time thinking about that. But,
Well, that's part of
Right.
the exercise I think that Brian Clemens will be doing, actually. And this is
That's
why,
correct.
that's why I think it's important to go through this financial exercise with him. For two reasons. I'm assuming you've given us direction to go down the road of doing a request for quotations to address an immediate need and a priority with respect to this washroom office. We're now going to go the portable modular route. So we're going to do that in May. That obviously, to fund that's going to exacerbate this particular problem, I suppose, in the short term. But if we have a good, robust report presented that lays out the current situation up to the minute, where we're at, taking into account the portable office washroom issue, and lays out the situation with some options and some strategies, that really is written for the CVRD, so that they have the complete picture moving forward for the remainder of the year and into 2022. That's how I would picture it.
So I just was thinking, I think, Graham, you might have mentioned this number. If not, I made it up that you mentioned it. There'd be something like around 10% of a contingency of 10%, and I interpreted that to be of planned revenues, which would be another $136,000 or something.
Yeah.
But so if we said that was a good number, just let's make it up for now. Would that be the same as the operational non-statutory reserve? Does that form the contingency? Or is that for a different purpose than contingency?
I would say that is the contingency. That's 106,000 in there right now. So the page.
Why is it 106 right now when it's 129 on the screen?
129. Oh, the 129 is so if you go to page 13 of the financials, it's made up. This is the operational reserve, and these ones have been put aside for specific projects.
Hang on, trying to get to page 13. Okay, looking for a number that says 106,000.
It's on screen if you can look on screen.
Right there. So that would represent the contingency, and if we were, so that would be approximately 7% contingency based on revenue.
Yeah.
Does that sound adequate? Presuming that we've wiped out the surplus in some other means.
That's really hard to answer. You really need to do a more detailed look, because repairs and maintenance can vary that much almost if you have a major break fix or whatever issues and any water mains and stuff like that, right?
Yeah. Which Yeah. And no risk of that around here, right?
Yeah.
Pipes in the ground are all good, right?
We have Texas-sized leaks at times.
Sorry, was that sarcasm?
Absolutely.
But Mr. Chair, this is one of the things that I've tasked Brian to come up with too, is basically his observations and his recommendations in regards to where he thinks we should be. And then, okay, what are the options and strategies to get there, right? On the issues of surplus and shortfall and reserve obligations, those types of things.
So I'm interpreting it this way. Let me just sum it up and say it. So we have just come through a period of high financial volatility by building this water plant. And as a result of that high volatility, things have sorted out in a way that says we are less comfortable than we were. Like we had a very comfortable position prior to starting that, and having gone through this the most major capital expenditure we've done in 30, 40 years, probably in history. We've come out at a place where we may need to make some adjustments to our reserves in order to create comfort going forward, right? And that is based on, that we have a reserve shortfall of approximately $90,000 after including our operating deficit from this year. And we're likely to increase that by another $125,000 to finish off the plant by putting the office in place. And so we've commissioned a report to say, what do we need to do about it? Like what is recommended, and that may come in the form of additional levies, borrowings, or reserve allocations. Is that about right?
That explanation works for me, and that's how I look at this issue. Exactly.
But we need to get it to that simple for the landowners, right? And
Agreed.
To me, I thought when I'd seen the original numbers, Graham, and I said I was panicking, it's because I was kind of going, it felt like we didn't make good decisions along the way. Now that I see these numbers, I get it. Like we're talking about, we're out by about $100,000 on a $5.3 million spend, which is a 5% variance, which in my business experience is kind of going, oh, well, I wish that hadn't happened, but it can be expected. It's not outside the range of expectations.
Yeah.
So, it wasn't all about the water plant either. Like, we know from our budgeting cycle that we overestimated revenues in our budget last year. And that is probably the biggest cause of our operational shortfall last year. There was I remember discussing it, the algorithm used for revenues was optimistic. So I'm feeling pretty good about this, like, could it be better? Sure, it could be, it could have turned out the other way, that we're 5% to the good. But we just need now so we just need to figure out exactly how we explain this. I'll try to get the right wording into my annual report as well. But we have to be prepared to be as clear as we can be with landowners as to where we're at next week.
Yeah, and my only suggestion is, I think if part of the presentation, Graham, you draw us back to that, simple one pager in regards to the shortfall in the reserve obligations. That I think will make sense to a lot of people.
Yeah, the obligation is the key word there.
Yeah. Like if they were dollar for dollar, you kind of go, okay, our obligations have been fulfilled, but there's no safety margin.
Yeah.
So we need a safety margin.
And there's nothing that, again, that I've come across that would suggest, and I think this is backed up in the statements, that there's been no illegal expenditures. You can say what you will about, the process of how we got here, and what information was presented to the board or not, and how it was dealt with in what type of meeting. But at the end of the day, there's no illegal expenditures per se, or anything that was done, inappropriately or ultra virus, that certainly would have been brought forward in Graham's summary of the audit findings. This is the snapshot issue of where we are financially, and this is why I'm continuing to say that, we need now to take this to the next step. Essentially, what we're doing is engaging some professional expertise to pick up on the auditor's recommendations to, okay, how are we going to address these moving forward? What are the options? What are the recommendations?
Other trustees, Ted, Eve, Susanna, any questions about this topic? Anything else about the financial statements?
Yes, I have one thing to add. Did speak to Brian for about a half an hour, going over some of the things regarding the water treatment plant, being that it was mandated and the possibility that if this did not go forward, it could be $30,000 a month in fines from Vancouver Island Health. That's $360,000 a year in fines if that happened. And again, sit back and think about the amount of money that was spent, that was put into this plant from the Union Bay Improvement District. That's pretty amazing. And yes, there was money borrowed. That was reality. We had no choice. The thing is that all in all, I think we accomplished what needed to be accomplished at the moment. That was to have a water treatment plant that was functioning. That has been done. These other things, such as a place, the staff to have a room up there to be comfortable and not inside that plant, which is wet, cold, and noisy, is necessary. We knew this was going to have to happen, but the most important thing at the moment was to get that plant built and functioning. And really, when you look at the amount of money that we have left after all of this went on, I think we did a pretty good job. And I think the trustees and the staff also did a very excellent job in doing what was needed to get this project done. And I appreciate all of them. And it's going forward now to the regional district in July. And again, being the regional district has the ability to apply for grants, both provincially and federally. I think the rest will get done, and the union-based system will work well for many years to come. That's my say to it.
Thank you, Ted. Eve, anything further? Questions or? Susanna?
I'm not happy with being a board member myself through those from 2016 with the way that we communicated information to the landowners, particularly between 2016 and 2020, and the way that we researched the financing and the payments of our debts. So I don't feel it was really well professionally done at all. We had great deal of difficulty understanding the financial statements, I have to say. This is not the first time. So all kinds of problems, including, I also believe there was a separate fund that was sitting out there, so we knew what we had and what we didn't have. And clearly we really didn't. So that to me feels very unprofessional. And I'm really glad that we're going through conversion, and absolutely the water treatment plant was necessary and needed, but we also had an obligation to provide a staff room and a washroom. So, we bumbled along. I know we all did the best we could. I certainly did. And I'm really glad that we're converting. So I don't know. I think, I'm glad we have the plant.
Okay. So Gary, do we need a motion to approve these here, or does that happen at the AGM?
I believe that that should probably happen now. Janice, do you recall last year, was this done at this stage of the process? When the financial statements were presented to the board, or was that done at the AGM?
Graham, do you remember?
It
Well,
was
I sure
done-
hope whether it's draft or not, I sure hope it's posted. It's posted right now, isn't it? Yeah.
Yes, it is.
Yeah. Thank you.
Typically, it's the board approves them now, and it's also shown at the AGM as well. But it's approved now.
Yeah, I
So
see.
the draft goes off, and so we go over the final results at the AGM.
Okay, I'm certainly comfortable with that.
Okay, so motion to approve the financial statements as presented by Myers Norris Penny.
I so moved.
So moved.
Second,
Second.
any further discussion? Okay, all in favor, say aye.
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 So Graham, in terms of next steps, are you going to make any changes or take any draft watermarks off or anything and get it back to me so that I can then, because what I will do now is post the AGM agenda with the financial statements attached on this coming Monday. I always do it on the Monday before the Thursday meeting. So would I go with these, or would you make some changes now that the board has approved them?
I will, no changes, the draft comes off, and I'll send the signed documents to you, so then you can put up the actual signed statement, so it needs to be signed off by the board.
Okay, sure. Okay, that's
So
great.
I'll forward those to you.
And if you can get that to me by well, I guess it's the end of the business day tomorrow.
Yep.
Possible. Okay,
And
perfect.
is there anything that we need to do about the management letter that is generally on the side from this?
The main issue is the financial management, which is in the audit findings, so I didn't produce one for this meeting.
Okay,
So that one won't change, right? So I'll just put that one in the package as well for next Monday? The audit findings report?
Yeah, the audit findings, yeah.
Yep.
Audit findings and the financial statements.
So the revised financial statements or tweaked or whatever, you'll send those to me and I'll post those as well as the audit findings report on the website on Monday. Okay.
all right, so I guess that, thank you, Graham. And before you sign off, maybe you could make Gary the host again, so we don't lose the meeting when you leave.
I think I already have.
I think he had.
Okay,
Yes. Thank you, Graham. I know this has been challenging.
It's all good.
thank you very much.
Graham.
Thanks, Graham.
Enjoy your
Thanks, guys.
weekend.
Yeah,
Thank you.
bye.
Take care. So we have one last agenda item, the added one, which is the scheduling of an special in-camera meeting for early next week.
Okay.
And Mr. Chairman, it doesn't necessarily need to be a long meeting, but two purposes. One, to present some advice from legal counsel pertaining to one of your strategic priorities. And the second item is to discuss some HR matters of a personal nature regarding a number of staff members. It's really just an update in terms of where we're at with the conversion process as it relates to the HR function.
And you want to have this before the AGM, correct?
I think, if we possibly could, because it relates to one of the strategic priorities, and depending on how the board receives that advice, we could perhaps rise and report in regards to what the current status is. So ideally, before the AGM, yes.
Yep. I'm back Monday morning, so Tuesday would be better though.
And so if we say Tuesday, I am only available Tuesday afternoon.
I'm not available on Tuesday unless it's early morning.
Oh,
Okay, I
What
am
about,
available.
What about on Thursday? Because the AGM is in the evening at 7 PM.
Right, okay. Yeah, what about Thursday?
Or Wednesday. Whatever.
Wednesday, I'm pretty much completely out of pocket, and if I'm not, I'll be brain dead after 8 coaching sessions.
Yeah,
Yeah,
and I've got another commitment in the afternoon on Wednesday, so.
Okay,
so
So-
Thursday's good. Eve, does
Gary, do you
Thursday
want-
work for
yeah.
you?
after 10:30 is fine
Okay,
on Thursday.
Gary, do you want to take our slot?
10:30?
Yeah.
Anytime on Thursday, I'll make it work.
How about we say like 10:30 to 12 or something like that, or 10:30 to 11:30?
I think it would be just an hour. It's probably
Yeah.
about an hour, maybe an hour and a half meeting.
So 10:30.
on Thursday.
10:30 Thursday? Okay.
Okay, good.
Ted, are you okay?
My day is done as of today officially.
Oh, that's right, you are.
It is.
I forgot that. We should have a thank you for Ted. Thank you for
I-
your service over the last 3 years, Ted. We'll do that formally at the AGM as well.
Okay, what I'd like to say is, I'd like to say to Eve, Susanna, yourself, Gary, and Janice, thank you very much for your participation and your hard work, working to bring the improvement district to its finale come July 1st.
You're welcome, Ted.
Thanks, Ted.
Thank you.
Thanks, Ted.
Ted,
But
you
we'll
will be
see you
at
at
the
the
AGM though,
AGM.
right?
Yes, I'll definitely be at the AGM, and it's going to be on Zoom, correct?
Correct.
Correct.
Disappointing, but that's the way we got to do it, I guess.
Hmm.
It's the only way we're allowed to do it right now.
Yeah, that's correct.
Yeah,
Now I'm gun shy that the same IT issue will happen with Zoom. So maybe Janice, you and I should have a chat just to make sure.
Or,
well,
or maybe get
I
our,
think
our IT support to help.
yeah, but Eve, you got on, right? You changed your password successfully, right?
No, I had to actually, they wanted my Zoom password, which I don't even have. So I had to,
Okay.
I had to actually register with Zoom and make a password, and that's what I used.
Did you save the password so that you don't have to do it every time?
Yeah, I wrote it down.
Okay.
Right, but Eve, so you were able to successfully sign
Hey,
in?
let's not go down this while we're on a
Yes.
public meeting.
Sorry,
I'm on
Yeah.
Zoom right now.
okay,
Yeah.
all right, I gotta try to figure it out
Yeah.
myself, okay.
Yeah, but from this perspective, maybe we want, because it is an AGM and we're hoping for a number of members of the public, perhaps we should make sure our IT team or our IT support gets it
Yeah.
right for us.
Yeah, that would be great.
Okay, Janice, how about you and I have a chat about that tomorrow in terms of the Zoom link for the AGM?
Yep.
Okay. I'll give
Yeah,
you-
I'll talk to Tom.
Okay.
Awesome. All right, so do we need a motion on the meeting? Is that necessary or?
Mr. Chairman, so can I just take 30 seconds to outline where we're at? So I've prepared the AGM agenda in draft. I'm completing my report. Mr. Chairman, you're going to provide me with your report. I already have the ones from Dan McGill and from the fire chief. I will, as per my usual practice, send out the AGM agenda with all the backup materials, including the statements and the audit report on Monday, and post that link on the website. Talk to Janice tomorrow to, ensure it's IT proof. And I will also send out on Monday the in-camera agenda with, it'll likely just be one attachment, a small attachment. I'll send that out on Monday for Thursday at 10:30. And I'll post the appropriate notice on the website as well, because we have to do that. It's a special board meeting, special in-camera board.
And we don't need a motion to schedule that.
Yeah, let's just make a motion for a special in-camera meeting at 10:30 on Thursday to deal with an HR matters and advice from the solicitor.
Okay, so moved. Second,
Second,
all in favor, say aye.
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 Alrighty. Okay, so that should be it. Motion to adjourn.
So moved.
All in
Second.
favor, say aye.
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 Thanks,
Okay.
everyone.
Folks,
Thank
we'll
you.
see you next week.
Yeah.
All right, thanks, everybody.
Thank
Take
you.
care, everybody.
Take care. Bye-bye.
Aye.